Good morning. Yeah, with the situation, the crisis we are in, I like to take a look at my Roth IRA to check my stock portfolio and see how they are doing. I went there yesterday. I opened it up. I have not checked my portfolio for a while, and I opened it yesterday because I was trying to take a capture of something for one of my videos that I recorded a while ago that I have not published yet. And I took a look at it, and I thought it would be a good moment to make a video to show how I will analyze my portfolio, and hopefully if we find a stock that I believe in and I have some cash in the account, I'll just place an order. So if you invest in stocks or you have your 401k, it will be a good moment to look at your account and see what funds, mutual funds, what stocks, or which one are affected with the crisis we are in, the pandemic, and the traffic war, should I say, between China and the United States. So all that affected some stocks. So it will be a good moment to see the survival of in your portfolio. That way you know which stocks that when you can afford you will invest in, that are good for long-term investment, because when there is an economic crisis, they won't go down in value to affect your portfolio. And the one that lose a lot of money, then you know that those might be short-term investment type of stocks. So let's get started. I have the account open here. Let me just lower you down here. And as you can see, my account has been affected quite a bit. Let me adjust this a little bit. Yeah. Okay. So if you look at the top, you'll notice that the basis is $3,804, and I lost pretty much 51% of the value of the account. So that's how much I lost, or how much the price went down for some of the stocks, and that's the market value, 1,500. So pretty much more than half of my account, the value went down by half of what I have in the account. Does that worry me? Not really. And because that's a Roth IRA, that's for long-term investment, so it will go back up when things get better. So now let's look here to see what stocks perform better and which one didn't. So as you can see here, we have Ford here, and Ford went down quite a bit. So, and that's how much I lost, 600, and that's how much I spent on it. and it was telling me when I hover over it, it's telling me that the average cost per share by the time I purchased it was $10.55, and now it went down by half. So I think Ford would be a good one for me to invest more in if I had some cash here. Let's go down here to see what I have. And while we go down, we can see that there is this T. Rowe Price mutual fund here that is performing okay, and the bottom one not quite. But I have some cash here, 217. That if I wanted to spend that on something, I think I will do that. Just try not to have those as array. Kind of surprised that. Okay. So I'm just going to be moving my computer here. Okay, so that's that. So let's go back up again. And we see Ford here. Yes, you can see it. So now I wanted to make sure you are looking at the cost, the loss as well. So let's go and check GIS. GIS here, it didn't lose much. I'm in the red by $51, and in fact it cost me about $56.98 to purchase the share in the past, and now it's $51. So you can see that it's low, it's down, but not much. And as of GE, I lost $191 as an unrealized gain loss, and it cost me about $15.05 to purchase the share in the past, and now it's $7.62. So it's way more than half. The price went down, more than 50% here. So when I'm looking at this, what am I thinking? So I'm going to click on them. So pretty much the first thing that I'm doing here is checking their current price to how much I purchased them. So that's one factor here. And there are some stocks here that I lost money in. So like this one at the bottom here, that filed bankruptcy. So I lost $711 there, and there is those two as well that I lost money there. So those I know that, they are really the losses here. As for the one on top, I believe they will get better. For WLL, I don't know for sure. We have invested in that stock for like the past 3 years. We put for short-term investment, we invest in, and when it's down and when it double in price, we just sell it back, and we have made money on it until this time when we invested in right before the tariff war between China and the US started, and the stock price start going down. So from how much we pay, $22.93, it went down to below $1. So I don't believe in it well enough to invest more money here with that $200 that I have on hand, because that's another $600, almost $600 that I'm about to lose here as well. The last 3, I know that I lost that money, but as for this one, I don't know if that'll be able to go back up or not. But for the top 3, Ford, GIS, and GE, they are okay. They are strong companies. But as for GE, I don't know if it was a good purchase. So let's click on it quickly and see. Now that I look at this to look at the current price to how much I pay for, because a lot of time when I make purchases of those stock, I like the price to be on the low side. So they were on the low side when I make those purchases, but now they went even further down. So let's check on GE, for example, to see if it was a good stock to start with. So I'm going to move you to the side a little bit and click on that GE. Now I'm going to move you back, and as we scroll it up, we can see that the price $7.62, when we compare it to 52 weeks range here, is quite close to the 52 weeks low compared to the high. So yeah, it went down, and I believe I don't know how much I paid for it. I had to check it again on the other. See, but down you can see that. Let me see if I'll be able to scroll it even further. Oh. So let's take a look at the dividend. So you will see that my second criteria was to compare the actual price to the 52 weeks low and high. So now my third criteria will be to check the dividend. The dividend is 0.52% annual dividend yield. So if my money is sitting there for that stock to go up and it's not generating any dividends, well, it's like I'm just losing money there, you know. So if I'm investing in a stock, unless the stock is a stock that fluctuates quite a bit, I like the dividend to be high enough so that it's generating some dividend income for me. So I'm now happy with this annual dividend. So now let's take a look at the charts as well to see if the chart, and when I'm talking about chart, I'm not talking about this one that is just tracking 5 years. Now as you can see, it went down to $5.90 right in 2020, somewhere there. And you can see here that they have charts. I'm going to click on that to see the chart, and that does show me the history chart for more than just 5 years. And that'll be my next criteria. So how many criteria we fixed so far? The first one was when I compare the price to how much I paid. The second one was to compare the price to the 52 weeks low and high for that particular stock. And the third one was to compare the dividend, to check the dividend the annual dividend yield. And the fourth one is to see the chart from how many years is that? 1980 to 2020. And as you can see the chart, let me just push it back for you to see it. You can see that that's a stock that goes up and down, up and down, up and down. And for a stock that does that, it's good to invest in it for the short term, not for the long term. Because when you're about to sell it and it's down, then it's going to affect how much you will take out, and it doesn't pay you enough dividend that when you reinvest it, the amount of share, the number of shares you purchase will overset the loss. So GE, in my opinion, is not a stock to invest in for long term. It's a stock probably to invest in the short term if you believe in it. But the reason why the short term will work is the low and the high is quite wide, not that much, 5 to 13. But unless you have a lot of money to invest in it, when it's going up and it goes up few cents or few dollars, you sell it, I don't think it's really a stock to invest in for long term, just for that reason that, you know, it fluctuates, it goes up and down. And you can see that in 2008, when we have the economic crisis, it went down as well. And now in 2020, with the economic and pandemic crisis, it went down as well. So that's a stock that when there is a crisis that affect the stock market, is going to affect this stock as well. So now let's go back again. And sometimes some people look at the beta, and you can see the beta. I don't like to get too complicated when I'm analyzing the stock market, but there is a beta here. Usually when you have a beta that is more than 1, I believe, that is a stock that will fluctuate and probably will go down when there is an economic crisis. But for a beta that is lower than 1, will have an opposite reaction in an economic crisis. So when there is economic crisis, that stock might be stable or go up. So that's something to take a look at as well. So this personally, it just the better confirm my analysis here that it will get affected when there is an economic crisis. So let's get back to where we were before, and it doesn't even pay enough dividends, for that to be reinvested and purchase more share for you. So now that we look at GE, and GE in my portfolio was not a good buy in my opinion, let's look at WLL as well. And WLL is oil and gas and consumable fuel. You can Google it more to see more about it. It doesn't pay dividend, and a stock that does not pay dividend, that what I like to do is just trade them, not invest in them. So I purchase it that when it goes up, I can resell it and lock in my gain. Now I won't be able to sell it, because if I sell it, then I'll lock in my loss. So, and here you can see that it is less than $1 on the low side, and on the high side it was $30. So it was, I think I purchased it when it was like $26 or something like that. So that's something to consider and see if that's a stock worth investing in. But at this point, I won't invest more in it. So let's click on the chart here to see how it has performed throughout the year. And as you can see, the criteria, it doesn't pay dividend. So I'm investing it for a long term, but for the short term, yes, because I have done that for the past 3 years and make profits, but not this time, apparently. And when you're investing for the short term, 6 months is the average. Going past that is more like an investment than trading a stock. So now you can see his chart here is something that fluctuates quite a bit as well. If I push it a little bit further for you to see it, from 2004 to 2020, it goes up and down, and at one point it was 350. If I bring it closer, 350. And yeah, that's not a stock for long term in my opinion, but short term, yes, you can make quick profit on it. But I think it has to be when the economy is great, because when there is an issue, it will affect it. And the problem started, the price started to go down when there was that tariff issue between China and the United States. So I don't know how they are related to it, but it affected the stock price very quickly. And I think it was, it's my opinion to think that's why it started going down. And you can see the beta here is quite high, 370. So that's something that will fluctuate, and that's something, in my opinion, I would prefer to trade, not to invest in. So let's go and check another stock in the portfolio, since we're analyzing the portfolio to see what is performing and what is not. Let's take a look at GIS. And GIS here is General Mills, and that's a stock that seems to be doing okay. So you can see we are going to compare the price before we compare the price to how much I pay for. So now we are going to compare that 51 to 52 weeks low and high. So it's 46 to 60 and it's selling for 51. It's down, but I think it's okay. So it's even, let's pull a calculator here. So you have 46.9 and CC. So that total to that divided by 2, 53.29. So that's the median, that's the middle, and it's $51. So it's below, is lower than the middle of 52 weeks and high. So if you wanted to invest in it, I think it's okay because it's closer to the low than the high, and you can see the beta here, which I don't usually pay attention to, but it's lower than 1. So chances are it's going to do better around this time, and it's giving me that impression. Let's take a look at my next criteria, which will be the yield. 3.78. That's great for a stock that is paying 3.78% annual dividend yield. Yeah, well, the money is going to be generating more revenue while you are waiting for the stock to go down, to go up. So let's check the chart here as well for GIS. So when I click on the chart, isn't that amazing? Look at it. You'll see that is like vertical. Even though it goes up and down, it just gives you that vertical look. So this stock, in my opinion, is good for long-term investment. Yes, it's going to go down, but it's not going to go down too much. It's going to be going up since 1980 to 2020, and here is 2008. Did you see how low it went? Not much at all compared to the other one that we saw, and that was the past, that was during recession there. And now in 2020, did you see it went down as well, but not to the same level as 2008. So it kept the curve going up, and it's paying well a good amount of dividend that, in my opinion, is a good stock to invest in for the long term, not to trade in, because it's not going to be fluctuating enough for you to get in and out. So it'll be a good one to just invest in and let it do its things and reinvest the dividends in your portfolio. So now let's go back and check Ford. And we have Ford here that I spent about $10 in average to purchase. Now is $5. Let's click on it and see what it's doing. So as you can see, we check the first criteria, how much I pay versus how much is selling now, which is not a criteria for you if you have now purchased it yet. But the next criteria is the price compared to the 52 weeks and high. So it's selling for $5.19, and it has been down to $3.96, and the high is 1056. So yeah, is on the, let's pull our calculators here, and let me see if I can put on this side here. So 3.96 plus 10.56 divided by 2, 7.56 will be half, like the middle of the low and the high, but it's now 5.19 or something like that, so it's even below this, so it's quite close to the low than the high. And there is something I like to do too though, is just take the high as well, divided by 2 is 528. So and it's selling for 519, so it's below that. Now let's take a look at the dividend it's paying to see at least it's paying something good. And as you can see, the dividend, what is it here, is 11.56%. Well, I mean, that's good. I mean, the amount is paying is 15 cents, but based on the price, that comes down to 11.56% a year. So at least if since I invested in it, you know, it's going to be generating dividend income, and as I reinvested, it's going to be at least buying more share for me. So now let's take a look at the historic chart. And I think Ford is a company that is, I mean, it's not going to succumb this crisis, so I think it will survive it. And as you can see the chart, personally is a stock to invest in a short term. It goes up, you sell it to lock in your game. It goes down, you purchase it, and when it goes up, you sell it to lock in your game. Is that type of stocks, that type of things are, I think I will do with it. But I have it in my portfolio for a while now because I like the dividends that it's paying, and at least it will offset the loss. But you can see that it doesn't stay up. You know, it goes down, it goes up. And during 2008, it went down quite a bit and almost reached the same level in 2020. So it tells you something, you know, if you purchase it back in 2000, let me put it back close here. So if you purchase this stock in 2091, when it was on the low side, and in 2020 it's still on around that level, even lower than that, you know, you'll have lost money, maybe because of all the share that you will purchase through with the dividend earned. Maybe that will offset the loss, but just give you an idea that stock like this, when you invest in it for long term, there is a chance that it may not perform well in the portfolio because of, depending on when you will sell it, you may not make much profit on it. So it's better when you invest in it because it's low. When it goes up, probably might take a year or two or something like that, you just sell it, and by that time you'll generate enough dividend that will buy more share, and you just sell it, lock in your game, and do it again if you want to. So, but yeah, originally when I invested in this stock, I wanted to trade options, but then I don't know if that's the right terminology, but then I didn't. So I was thinking, and I wanted to practice option, and I wanted to have enough share on hand to do that. But then after thinking about it for a while, I didn't really wanted to get into that. So that's why I have it, and is getting lower and lower, and I'm purchasing multiple times. I didn't just purchase that amount one setting. So, and I didn't purchase 100 share, I purchased less than that. But reinvesting the dividends, I have that option here to reinvest the dividends, and is helping increasing the number of share that I purchased, because the stock is low now, so it will buy more share as they pay me dividends. Thank you for watching, and I don't know, it took quite a bit of time, so I'm not going to go through my brokerage. I have a brokerage account as well. I'm not going to go through that, but it just give you an idea how you should analyze your stock, or your single stocks. And you can do the same thing with mutual fund as well, to see what criteria will work, and that will work, and that will help you to not jot down stocks that perform well during a crisis, so that when you can afford, you invest in those stocks for the long term. And the one that didn't perform well, if you believe in the company, they might be the one you invest in for short term. They goes up, you just sell them. So you trade those stocks, and the one that perform well even during a crisis that will affect the stock market, they will perform well. You invest in them for long term. That will be investment. So trading versus investing. Thank you. I'm Afiavi, a junior Libreman, creators of Libreman Consulting L.L.C YouTube channel, and owners of Nina's Soap. And our website is ninassoap.com.